Okay, folks, Vic here with a midweek trade example for you. Well, Tuesday, actually March the 1st. Last week on February the 23rd, I hosted a live webinar where I went over in detail how we scalp trade the Forex, and I showed you several patterns that we use. In this video, I'll show you yet another example of one of the setups called a swing break rotation. And this one's set up today, March the 1st. And you'll see that this trade is up a substantial number of pips so far as I'm recording this. Really nice little reward risk trade. Just before I show you today's trade, I just want you to know that in that webinar last week, we made a very special, deeply discounted offer for joining our short-term service or even our long-term service. And that offer expires today. Okay, so you might want to check that out. I've put links to both the webinar, in case you missed it, and the special offer in the text below this video or in the email that you received. Okay, and yeah, and you know, if you like this video, please give it a thumbs up by hitting the like button. I'd really appreciate that. And be sure to subscribe to our channel by clicking the button in the lower right corner of the video. Okay, let's have a look at the trade. So let's go over this trade on the US Canadian dollar pair and kind of the surrounding factors that are things you should be aware of. If you look at this trade, you know, on a weekly chart, which is here, and this is really good for getting context about what's going on. This prior week was a big pin bar reversal, so that would get you a little bit maybe reluctant to be going long. But there's other things going on here right now, and this is, you know, something that just takes experience and observation. And on the daily chart, you see that we're at a tremendous level of support. I mean, that's held really, really well. We've had other trades off of this level. And when it comes down here, there's nothing to do unless we have a reason to do it. And the reason is we are at a support level and we have a pattern that we like to trade. And on the 4-hour chart, you can see the same level. I mean, it's just a great level. So on the 15-minute chart, you know what happens on the 15-minute chart is we have what's called a swing break and rotation. I went over this in our webinar last week, so have a look at that if you'll get a little better idea. I won't bother with it now, but in any event, when this dropped like this and rallied up like this strongly, that's our clue that, hey, you know what, we should be looking at buying a pullback. And I like to buy deep retracements. I don't like buying them too shallow because the reward risk is far, far better if you can get in down further and with a low stop. This is what we call a natural stop. And sometimes you don't get hit. I mean, it might come down and it misses and it goes back up and you don't get filled at a deeper retracement. And that's okay. That's just part of trading. But and you don't chase price when that happens. You just move on to the next trading opportunity. In this case, I like a 79 to 88% retracement, and this took the 79% at 126.62 on this with an 18 pip stop. And you can see the move up here, and you know you can look at the Fibonacci extensions from here to here. They were both hit. The 127. I'll just put it on here. Let's do it right here. From here up to here. There's the 127 extension. Here's the 162 extension. And here's these retracement levels I was telling you about for the entry. So in this case, they were both hit, and so they both provided, you know, really good reward to risk. You know, the first one here is over 2 to 1, and see, it depends too if you scale your trade or not. Like if price is going up here, and you take part of your profit on the way up, obviously you're not going to get as much reward risk by doing that. But on the other hand, with the situation that's going on right now in the world, it's a time for a little more caution. And so, and just on that context, I want to tell you that, you know, when we have these situations going on like we do right now in with the Russia-Ukraine thing going on, you'll see a flight to safety, a move into the dollar. Sorry about that. Let me just turn that off. You'll see a flight to safety into the US dollar. And if we have a look at the dollar index right now, look what it's done today. I mean, it's had this huge move up, and with money moving into it. Here's the daily chart. Very, very strong move up. At the same time, we're seeing a stock market getting hit today. And you can see that right here. Here's the S&P 500. This is a daily chart heading down pretty strongly here. See the 15-minute chart down very, very strongly. So there's a sentiment and a correlation you can get that by watching all of these things, and with the situation going on with the in the Ukraine-Russia situation, it's kind of sets up for this sort of a move up. If it's kind of hard to explain that, but because of the fact that the U.S. dollar is probably going to rally a bit, and especially when you get a pattern to set up. And look, we don't know. I mean, things could resolve quickly, and all of a sudden this thing plummets and you get stopped out. That's just trading. But the thing is, we have a setup, and this gets back to having your trading plan. You have a trading plan, you have a setup, you put the trade on, right? You don't kind of start second guessing it all and, oh, well, what if this, what if that? Either you trade or you don't, and you have a pattern or you don't. And if that's your plan and that's your pattern, you take the trade. Win, lose, or draw. You don't know that this is going to happen. It could have gone straight down. And getting, to that point is a really, really big deal in your trading, where you have, complete emotional detachment from the outcome of the trade. You cannot worry about what the trade's going to do, how it's going to end up, if you're going to make money or not make money. That's not up to you. What's up to you is seeing your pattern, executing your trading plan flawlessly, letting the market do its thing. Because if you've got a trade setups that give you an edge, which ours do, then that's all you can do. Put them on, and over time the edge will play out for you, and that's results in a winning trading campaign. Okay. When you look at this trade here, I'll just finish off by saying this. You can see this just huge move going on up here, right? Ask yourself. You don't have to answer to me or to anybody else. What would you do? This is all hindsight now that it's all heading up here like this, right? How would you have handled this trade? Okay? Because like I say, you have perfect hindsight right now, but in real time, at what point would you get out of this trade? Would you scale out, or would you go for more of an all or nothing approach? Because these are questions that you need to have answers to before you put your trades on. Okay? Thanks so much. So there you go. If you have the time and or inclination to trade short term like this, as I say, we have that special offer that expires today, March the 1st. So check that out. And there's a link to the webinar there as well. The webinar was all about strategies for growing a small Forex trading account quickly and safely. And, if your situation dictates that you cannot trade short term, then our longer term trading that my Coach's Corner partner Darko looks after would be perfect for you. And you could even get a discount on that service until today as well. Okay, and just so you know, our trading strategies are basically the same, no matter what your preferred trading style is. Okay, thanks so much, folks. I hope the video was helpful. All the best. Take care.